So what's bothering the market most, and where do we go from here? I want to ask Keith Fitzgerald. He is the principal of the Keith Fitzgerald Group, Michael Lee of Michael Lee Strategy, and Nicholas Wealth Management President David Nicholas. All right, guys, I want to hit the macro issues first. Let's start from a 30,000-foot view and then move to these individual opportunities in the market. Ranking, if you guys will, the issues that you think are bothering the market most in the last 72 hours. And we can start with stimulus, Keith. How much do you think this saga is really dragging on the market at this point?
Well, I think it's dragging a lot. And to your point, I would add a third thing. America wants Congress to do its job. Numbers almost are irrelevant. Earnings are out the door. What people need is to get back to work. They need hope. They need confidence. They need a vaccine. They need politics to settle down. When those things happen, the market is going to take off like a rocket.
Michael, your thoughts on the impact? Right now, I'm just asking you the impact of the stimulus talks. I believe it's been a few weeks now where people kind of believe it won't happen. If it does, great. But we're kind of resigned to the fact that it will happen after the election.
Yeah, Charles, I've been saying this on your show for a little while now. The enhanced unemployment benefits ran out at the end of July, and nobody seemed to be really in a mode of action until sometime in the middle of September. We're not going to see anything till after the election, but I think there is a good chance we'll see something after the election. What I think is really moving the markets right now are your sorts of surprises, and we've seen very few, and you combine that with some really aggressive call buying going on in the background that's creating some short squeezes or some sort of technical aspects of the underpinnings of the market that squeezes the market higher and higher. And that gets a little bit exhausting after some big moves. So we're just seeing a little bit of a sell-off from that. And I'd see today you're seeing the resumption of some buyers come in the market buying on the dip. I would be a buyer of the dip on this market. And I'd also add that unemployment number this morning, I think people are looking at it the wrong way. I'm laser focused on the continuing claims, not the initial claims. I think there's too much noise going on in these unemployment offices.
10 million from 11 million. Okay.
Yeah. So
let me get to David though, Michael, because right. Let me get to David because I want to go over all of those things individually if we can to really get an assessment here. David, Michael talked about those extra jobless benefits. Let's not forget that President Trump found a way to give the American public extra money. In fact, 45 states have finally taken him up on that. But that's going to run out soon, too. The impact of a do-nothing Congress right now, particularly with stimulus.
Yeah, Charles, it's a big deal. I mean, look, this is a headline-driven market. And I think the market can only ignore bad news for so long. So it's like continually. Today was another bad news. I know we're saying we're discounting the jobless claims, but 900,000 jobless claims, almost 1 million Americans again this week. I mean, that's ridiculous that at this point we're still seeing those numbers. So it's really unfortunate to see. So I think, look, we just have to decide, are we investors or are we traders? If we're investors, we got to turn down the noise. But if we're traders, we got to stay tuned to what's coming out of Washington, and we got to know and we got to respect the technicals. Right. So for me, this is a technical-driven market. You want to watch those levels.
Although I love what you're saying there, sometimes you're an investor, but you become a trader when the market becomes too volatile and you can't take it. Hey, let's switch to this rise in COVID cases and a chance of more. We're talking massive lockdowns in Europe and how they're hitting the market. President Trump, we know, against lockdowns, but that doesn't mean some states wouldn't shut down. Ironically, those states with sky-high unemployment rates already probably would be the first. So Michael, let me go back to you. You're making changes in your portfolio. Are you doing anything with the idea that maybe in America we'll see some of these states go the way of Europe and start to make these lock down their states again?
Charles, I think quite the opposite. I think what you're seeing play out in Sweden and then what you're seeing play out in the rest of Europe is that when you lock a society down, all it does is prolong the pain, right? You can either take it up front on the chin or you can lock it down and spread it out. So I think lockdowns are an absolute mistake. You protect the vulnerable. And I think here, election day is coming up. The day after the election, you're going to see massive opening up in the U.S. while protecting the vulnerable. So I think we're going to go the other way here. If they want to do that in Europe and further wreck their economy, have at it.
All right, Keith, you have been, for the most part, very optimistic throughout all of this. You've been a very steady hand. If we do see some states go the other way, and I don't disagree with Michael, but we have seen states, shut down pretty quickly throughout this whole thing. Does that change anything for you as we head into 2021?
It makes me cautious, but it doesn't change my optimism. And thank you for recognizing that, because, the path forward is to find those companies that can grow despite a lockdown, despite politics, despite any number of other things. So I'm continuing to refine my portfolio process I call the best, not the rest. So I'm looking to companies like Apple and Microsoft and JP Morgan, companies that are leading the class and can succeed practically no matter what happens next.
All right. Sounds almost like a Tina Turner song. You may get a phone call, but I like it anyway. All right, folks, the stock of the day, but for dubious reasons. Fastly, it saw its shares rally from $10 to $135, but today it's getting smashed. This after lowering guidance after the close yesterday and blaming it on one large customer, TikTok. Now, the financial media is using this to take another shot at those Robinhood traders. David, I personally push back on the notion that only the Robinhood traders are getting hurt today and that somehow this is just the beginning of their comeuppance. Again, it seems like Wall Street and the financial media, anytime they can, they try to push out the small investor. What are your thoughts?
Yeah, no, I agree with you there, Charles. I mean, I think it's generally across the board. Retail investors are getting hurt today with that stock. But, the rise of that stock in particular was somewhat ridiculous. So I think I'm not surprised to see the pullback that we're seeing now. I think the outlook is good for the company. But I think you're going to continue to see traders, even Robinhood traders, but general retail still trade this stock. But just for me, I think there's still downside left. I'm a buyer at 75. I don't like it right here at these levels.
Right. By the way, I'll be right in there with you, my man. I've traded it twice since it's been public. I know Baird had a buy on it and a couple other major firms. So it's not just some Robinhood trader in the basement and someone in their mother's basement trading the markets. Sure. All right, I need from you guys quickly. Let's go old school. Buy, sell, or hold. Should investors keep buying these growth names, right? The Amazons and Apples of the world. Michael, let me start with you. Do you still like these names to pace this market?
Yeah, Charles, you have to, because no matter what happens in the economy over the next couple of years, they're going to continue to grow their companies, grow share, and there's just no growth elsewhere in the world. So you're going to always and perpetually overpay for good growth names.
David, buy, sell, or hold?
Apple was underwhelming. I'm a buyer at 105. Amazon, I like it at 3,000, so I'm a hold.
All right, Keith?
I'm going to put my foot in my mouth and say I'm going to stay away from Amazon, but prefer Apple. I think it's going to double within the next 12 to 24 months.
All right, gentlemen, that was a lot of fun and very informative. We needed that on a day like today. Keith, Michael, David, thank you all very much.